Morning, Steve here in Chicago with the morning grain comments. Well, we have beans a little bit lower, corn unchanged, and wheat a little bit higher. When we look at the technical picture in the beans, it looks like we're in a downtrend. We're at that very important support level at $10, which not only is psychologically important, but also a price that in the previous times we've seen end users come in and buy the beans at that price level. So we're watching South American weather. Looks like some dryness for another week in northern Brazil, then the possibility of some rains coming into those dry areas. It's still too wet in parts of Argentina, and we'll have to see if that adds any premium into the marketplace if that were to continue. But we do think that in general, if we believe the numbers, soybean prices should drift lower. We did see one person actually look for a big break in prices based on the fundamentals for next year for 2017 soybeans. Over in the corn, we're at the upper end of the trading range. Maybe some of that could be some rebalancing by the index funds moving out of beans and going long corn relative to the difference in prices. We also note that the wetness in Argentina could reduce some of the acres down there. That's going to be planted, and we're watching pretty closely in northeast Brazil and see if that dryness extends into the rest of Brazil like it did last year and causes some production concerns. In the wheat, we're seeing buying. We went through some of the trend lines that we've had on the downtrend for a long time, and I think two things. Number one, you're seeing rebalancing, people coming out of beans and buying wheat. We do see the crop conditions in the U.S. winter wheat down. We know that acres are going to be down and that we're maybe putting a little premium in there. And we're watching some of the quality issues in Argentina. There's too much rain during their wheat harvest could reduce the quality of their crop. So, we are competitive in the world as far as wheat is concerned. Not seeing any export demand because of that, but it might be providing some little action for short covering by the funds who have a very large short position in the wheat market. Other than that, we'll be looking at export sales today. Wheat somewhere between 200,000 and 500,000 tons. Corn 650 to 950, and beans 800 to 1 million tons. And again, this is the time in which, especially our soybean demand, should begin to slow as the buyers switch, especially the Chinese, to Brazil. We got a January 12th report. The average guess for the soybean carryout, 473 versus 480, corn 2378 versus 2403, and wheat 1141 versus 1113. So we'll be watching that pretty closely and seeing, number one, what last year's crop is going to be, what the carryout's going to be, what global stocks are going to be, and we also get our first estimate of winter wheat acres. And some people think it's going to be down more than the average trade guess, around 34 million acres. So it should be a big day, January 12th, for the market reaction to the USDA numbers. Here in the United States, looks like we're going to be wet with conditions warming up for the next week or so. Funds continue to be long beans, meal, and oil, short corn and wheat, and we'll see how they want to take that into the first of the year. Outside markets, dollar's a little higher after yesterday's big sell-off. Crude's a little bit higher, and we're waiting the jobs data this week, and also just waiting to see how the market reacts once the new president of the U.S. is inaugurated. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.